Is BlackRock purposefully suppressing and dumping Bitcoin onto the market in order to buy back lower? Well, this has been a theory that's been floating around over the last 24 hours that I want to unpack. What is the likelihood of BlackRock actually dumping Bitcoin? And if they are, what are some potential Bitcoin price targets that we can look at in what would be a manipulated market? I'm also going to give you guys a market update, look at some of the key metrics that I'm seeing at the moment from the market across Bitcoin, Ethereum, and altcoins. And this is actually my first actual live stream in about a month. So welcome to all the viewers. Now we're actually live together. I can interact with your comments. And because I haven't had a chance to do a Q&A or answer many questions from the community in over a month, I'm going to dedicate the second half of this show to a Q&A. So we'll talk about the BlackRock story. We'll run through my market update. And then I will do a Q&A with the audience, answer some questions, research altcoins, just like good old times, coming live at you from Dubai. I see Chili in the house. I see Nico in the house, Luigi, Casey, Rave, Jay. Very nice to be back doing these live streams again. So now let's get into the content. So let's get into this BlackRock story to kick off this video. So Elio Trades did a tweet, and I want to read through this tweet and then explore the possibility of this being the case. He said, is BlackRock actually crashing Bitcoin right now? The theory that BlackRock is intentionally crashing Bitcoin before their ETF goes live is both fun to think about and also makes sense. Think about it. Their goal is to maximize market share and assets under management. If they deploy a Bitcoin ETF at the lowest possible price, their clients get better entries because obviously they would be deploying their ETF when Bitcoin is a lower USD denominated asset in price, therefore making more gains on the way up because, you know, if they buy in lower, then they would be making more on the upside and essentially end up depositing more because they see the returns that Bitcoin has exhibited via the ETF. Elio says, because of this, BlackRock would deliver a big W, and if they go live with the ETF after a big pump has taken place, their clients might get dumped on and worse yet, withdraw. So he's basically saying, look, it makes sense for BlackRock to want to suppress the Bitcoin price before they launch their ETF, because then when their ETF officially begins and they start getting that initial batch of assets under management, then the average buy price of participants into the fund will be lower. So the overall fund returns will be higher. And he says, on the contrary, after a big pump has taken place, so let's say the ETF goes live at 30K and Bitcoin experiences any kind of downside, then anybody that's investing into the fund is automatically exposing themselves to downside, and the overall performance of the fund goes down, reflecting badly on BlackRock and leading to people either withdrawing for the fund or showing less interest for the fund, which means less market share for BlackRock. So this was a bomb of a tweet because it got a lot of people speculating on whether this is the case. I was seeing Reddit forums on BlackRock dumping Bitcoin. I was seeing speculation here, like BlackRock does a lot of help to help its clients win big. If they put the ETF on the market after a big pump, their customers might get dumped on. I don't know if it's happening or not, but it makes sense with all the history and the of the global financial market and traditional finance. Don't you think there's a possibility they're actually behind the recent Bitcoin crash? And then also I saw YouTube videos, of course, from Elio, from Altcoin Daily. Lots of big YouTubers started picking up this story and perpetuating this theory that BlackRock is dumping Bitcoin. So what happened to the Bitcoin price? Well, the Bitcoin price ended up dropping in the space of one day around 8 to 10%. And then the day after, we did see another 3% decline in Bitcoin. And there's many reasons for this, but was the reason for this decline a big BlackRock sale? Well, I want to contradict this theory and say no. Here are the reasons to be skeptical of this theory, and here's why maybe you shouldn't read into it too much. One, Bitcoin overall will end up being a very small percentage of BlackRock's assets under management. Just for context, they manage around $9 trillion worth of assets, and they are the world's biggest fund manager. So Bitcoin, with its multi-$100 billion market cap, and let's say it can get to $1 trillion again, that will still be a very small percentage of BlackRock's AUM, as realistically, how much of the Bitcoin supply they're going to own? 5%, 10%? That's going to put it in the $50 to $100 billion region at most, meaning compared to their $9 trillion worth of holdings, it's a relatively small asset compared to their holdings across bonds, treasuries, equities, etc. Secondly, there's no real concrete evidence of this being the case, although it does make sense logically that BlackRock would want to kick off a fund at the cheapest price possible. It doesn't mean that it's probable. So just because something has a non-zero chance, so a higher than 0% likelihood of being the case, doesn't instantly make it probable, so more than 50% of being the case. And I think this is the major mistake a lot of people make. They kind of read into these theories and they think, oh, just because it can make sense, that means it's probable to be actually occurring, and that's wrong. I think overall we have to take a probabilistic approach to judging the markets. And if I had to give a probability just off the top of my head to this BlackRock conspiracy actually being true, I would give it like sub 10%. I think like 2 to 5% realistically is probably the percentage you could put on it. Does BlackRock want a lower Bitcoin? Probably. They probably do want a lower Bitcoin price when they are starting this fund. That makes sense. But does that mean they've taken active steps to manipulate the price of Bitcoin to suppress it? I'm not so sure, because there were plausible reasons why the market corrected. And I want to go through them, because the reasons why the market corrected, in my opinion, are more important than the reasons why BlackRock may have dumped Bitcoin. So firstly, we had the China Evergrande story breaking that they are filing for bankruptcy. This is obviously a huge story because Chinese markets are so interlinked with US markets, and any troubles on Chinese shores are going to reflect back on the US economy. So that had risk assets very shaky upon the Thursday and Friday opens. We did see a decline on the NASDQ, which is your Tech 100 index, of 2 to 3% for the stock market. That's maybe not for Bitcoin, but for stocks, that's a reasonable decline. And we also saw the NASDAQ start to break down from its uptrend that it's been in since January 2023. So year to date, NASDAQ has been trending upwards. We have started to see the sell-off. We've seen the cooling of momentum resulting in this break of trend. So the China news, coupled with people generally just being a bit more risk averse to risk assets because of the current situation of the US economy, resulted in a broader sell-off across equities, not just Bitcoin. Now, Bitcoin being an extension of a risk asset, being thought of as like a high beta play to indexes like the NASDAQ, obviously gets hit harder during times of market turbulence. Now, all of that general aversion to risk coincided with a Bitcoin-specific catalyst, which was, of course, the Bitcoin Spot ETF. And as market participants started to position themselves for the Bitcoin Spot ETF, the overall amount of open interest in the market kept increasing. Now, open interest is essentially the aggregate amount of open positions in the futures market open for an asset. So the total amount of longs and the total amount of sells. Now, open interest was going up alongside Bitcoin price going up. And what this indicates is that longs were starting to pile in to the Bitcoin Spot ETF trade, because it's a really exciting narrative for Bitcoin. It can have huge ramifications for the net inflows into Bitcoin and give it credibility amongst the traditional financial world if you have a Bitcoin Spot ETF. But all this leverage that started to build up, it happened in tandem with the risk parameters of the market shifting, investors going slightly more risk off, a bit of bad news coming into the market, and then all of a sudden you see a big unraveling. And what happened was there was a massive liquidation event for Bitcoin because there were a lot of late longs piling into the Bitcoin Spot ETF trade. And if you look in front of you at the liquidation data, we can see that it was the most severe Bitcoin liquidation event since FTX last November. So this was no event to snuff at. This was a major, major flush out. And we actually saw Bitcoin perform worse than a lot of altcoins. And we saw dominance actually retrace a little bit because of the fact that it was a Bitcoin-led rally. And when open interest piles up and people get too aggressive, well, you all know what happens. We see massive declines. The strength of the 24-hour Bitcoin sell-off was actually just as big as the 2020 crash if we look at the stochastic RSI on the 1 daily as an index. Never in history of Bitcoin, and I say history as in recent history since 2017, has the 4-hourly RSI been this low. So that's just a bit of a statistic for you. Sentiment, if we look from a pure technical analysis perspective, on Bitcoin has never been this low. So is it a buying opportunity? Well, I'm going to get into that in just a minute. I've got some charts that I want to show you that can tell us what could potentially happen next for Bitcoin, and also, of course, altcoins off the back of that. Speaking of altcoins, a lot of them held up, especially the on-chain alts. What we did see was a lot of the altcoins that weren't listed on perpetual exchanges did not experience a massive liquidation event. The liquidations mostly happened on the centralized exchanges because that is where you have access to trading with crazy leverage. And of course, as I mentioned before, because Bitcoin had that spot ETF narrative, that is essentially what ended up unraveling first. So I just think the Bitcoin spot ETF became a little bit of an overcrowded trade because of the delays. So because it continuously has been pushed back, ARK got delayed, because the next announcement isn't for September, because most market participants are expecting a further delay, maybe even into 2024, there's no immediate catalyst for Bitcoin. And when everyone in the market that wanted to buy Bitcoin ahead of the spot ETF no longer had a reason to buy Bitcoin, then the smallest event that hurts risk assets, like a shifting in global sentiment to do with China and the US stock market, that really affected Bitcoin in a more severe way than maybe it would have a couple months earlier, or just even a month earlier if the Bitcoin spot ETF hype was still there, because a lot of the buyers got exhausted. And when you see exhausted buyers with a whole lot of pent-up leverage and it unravels, well, you get a scenario like you're seeing in front of you with a Bitcoin decline, a pretty big decline across the market. So now I want to look at what could be next for Bitcoin. What are the charts telling me? And then we're going to get into altcoins in the second half of this show. I'm going to do some research live on the show and answer all your questions and do a bit of a Q&A, because I know a lot of you guys have questions about your own portfolios, about what to buy, what to sell. Maybe you're a little bit confused. So I want to run through all that sorts of stuff. So let's go into the charts. Here's the good news. On the weekly chart, Bitcoin structurally is still intact. So yes, the expansionary phase that a lot of traders were expecting from Bitcoin above the 30K level into the 34K level did not happen. But we technically on Bitcoin are still ranging. I want you to take note of this very important bounce that we got off the 200 MA on the weekly. This is a very key level for Bitcoin to hold, because if we go back historically, the weekly 200 MA has been a very important level for Bitcoin. We saw back in 2017, bouncing off this MA was the catalyst for the big bull run. We saw, despite deviation below, the 200 MA act as support for the 2021 run as well. We had multiple touches. We did see slight deviation below, but ultimately we ended up moving much higher. Now, when we came down during the lunar collapse back to this MA, as you can see here, we had a bearish retest of this level, which resulted in us ranging and creating a new Bitcoin low during the FTX collapse in November 2022. But what happened since then was the Silicon Valley Bank and the First Republic Bank bailouts resulted in risk assets rallying, and Bitcoin subsequently broke above this 200 MA and is now testing it as support. This is the second retest of support of the MA, and you can see historically just how important this is. That is why I'm not panicking just yet. I think the 25K zone is the real level for Bitcoin to hold. Now, if you are a spot trader in this market and you're not doing crazy leverage trading and you're simply trying to position yourself for the next cycle, and we have a massive Bitcoin dump like this on what is a pretty critical historical support, then I would not blame you for averaging in here. That's exactly what I did. I ended up buying in the 25K zone for Bitcoin yesterday because I see that we're on major support. Sentiment is quite bad. I think there is a chance we get a little bit of a relief rally. And yes, we could come back down and capture some more liquidity because this wick happened very quick. I still think if this level holds, it could be a good support long zone. Now, does that mean we can't flip below and things can start to break down back down to the 20K zone? No, that is a possibility, but you have to play the probabilities in this market because we can't always trade on the possibilities. We have to trade on the probabilities. And the thing is, we do have a significant level. The 25K level, though, it's not just significant because it's the 200 MA. It's also significant because this was the level that Bitcoin rallied off pre-Bitcoin spot ETF. So hitting 25K effectively means for Bitcoin that the entire Bitcoin spot ETF move has effectively been retraced. So buying Bitcoin at 25K is effectively like buying Bitcoin if the BlackRock news had never hit the market. Now, what percentage do you want to apply that this ETF will get approved? 50%, 60%, 70%? Bloomberg analysts give it around a 60 to a 65% chance of happening. I am in the camp that there's more than a 50% chance of it happening. It could even happen as soon as September 1st, which is the next announcement, although I do expect it to be delayed a couple months, probably into 2024. But eventually the SEC is going to have to make a decision. And if that decision is yes, and that sparks a wave of more ETFs being approved, because if they approve one, then they're setting a precedent to approve others, then that is going to be a major catalyst for Bitcoin. And if you can get a chance to buy Bitcoin with that catalyst being priced out of the market, like seemingly it is at the moment, then that isn't a terrible look. And that is one of the reasons why I ended up DCAing into Bitcoin yesterday. Now, I'm not trading Bitcoin on leverage. Why? Because I don't believe I have an edge trading Bitcoin on leverage. I know my personal limitations. I know what I'm good at. And I know I'm much better trading on chain. And I know I'm a much better fundamental analysis and researcher and picking altcoins early. That's really my skill. If you're a Bitcoin trader, though, and you want to use leverage and you're an experienced trader, you may look at playing some sort of reversal here. But for me personally, I'm just sticking to spot because otherwise I just find it a very risky proposition. 𝗕𝗬𝗕𝗃𝗧 came on the show and also talked about some of the other levels. So we know the 25K zone is the major ETF level. You also have the Silicon Valley Bank level as probably your next major support, because this is the level that essentially triggered that initial rally. Then you have the FTX lows, which, to be honest, I don't think we go back down there, because structurally the market still looks good and it would take quite a severe breakdown for me to flip biases. On the Bitcoin monthly as well, I want to draw in this level. I don't have it on this chart, but I'll just draw it in for you real quick. There's quite a key zone here in this 23 to 24K pocket. I'll draw it in roughly, which is essentially 3 monthly closes and opens in a row. So this is also quite an important level for Bitcoin's macro structure. Now, I know a lot of you aren't really trading on monthly charts, but if you are a long-term accumulator and your goal is to stack Bitcoin and alts, for the next cycle, then this will start to factor into play, because these the longer term the trend, the more solidified that trend becomes. And if we look on the monthly chart here, we can see we're still in an uptrend. We are retracing, but if we come down and capture some liquidity in this zone, that technically would still be an intact uptrend for Bitcoin to continue expansion. I think what the move a couple days ago did was not necessarily cancel the possibility of a bull run. All it did was delay it slightly. So people saying we were going to have a strong rally into Q4, I think now you're pushing that timeline back slightly to Q1, because now Bitcoin has key psychological levels that it needs to break on the uptrend again. What is going to get Bitcoin to break on the uptrend? It's a spot ETF approval, and it might just be a little bit of halving hype that starts to kick in towards December, January, because we do know the halving's in April. So I want to answer all your questions and get into altcoins as the next segment of the show. But before that, we're going to do our 1 Ethereum giveaway. So in around 20 seconds, I'm going to pick the winner of the SmarDex giveaway. So basically what we were doing was anyone that deposited liquidity into one of their pools, they're an amazing DEX. And if you put your wallet address after depositing liquidity into the dashboard, I said I was going to pick a winner on the show to win 1 Ethereum. So if you entered liquidity here, you may just be about to win 1 Ethereum. I'm going to pick a number randomly. What I'm going to do, I think we have like 79 entrants during the time period. I'm going to close my eyes and then I'm going to pick a wallet. And if it's yours, you have a 1 out of 80 chance if you're watching right now. We're going to send 1 Ethereum to your wallet, and I'll prove it on my next show. Okay, closing my eyes. Someone's going to win 1 Ethereum. This person, number 49. If this is your wallet, 𝗬𝗡𝗫73 ending in 87B. I'm going to make this bold so I can send it to the team. Congratulations, you've won 1 Ethereum valued at roughly $1,650. So congratulations. If you weren't one of the winners, don't worry, because we're still doing this giveaway every single week. So until further notice, we're running a 1 Ethereum giveaway every single week, which is absolutely crazy. And all you have to do to enter is go onto SmarDex, go into their farms. So they're essentially a DEX that has liquidity pools. They've basically solved the issue of impermanent loss, which is very interesting because of the way they're structured. If you go into Polygon, Arbitrum, or BNB, any of the L2s, so not Ethereum, and you deposit money into any of these pools, minimum of $50, you'll be in the running for 1 Ethereum next week. So, you don't need to deposit into their token if you don't want. You can put money into the Arbitrum pool, the BNB pool. I think if you have assets lying around and you want to earn some passive income on them, then it does make sense. Obviously, you still own the assets. You're just LPing them, earning a bit of yield, and then you'll be eligible to enter the giveaway as long as you go to the dashboard page and enter your wallet after you've deposited minimum $50 of liquidity into any of these 3 non-Ethereum chains. So there's a link in the description if you want to enter. This time next week, I will come on the show and I'll give away another Ethereum, but congratulations to the owner of wallet 0xD ending in 87B. We will just send money straight to your Ethereum wallet. So you don't need to do anything if you're watching. Actually, let me know in the comments. Has there been a winner, Paola? Did anyone win? And also put up the comments, Paola, so I can see them. Did anyone win? Someone say it in the comments. I'm just checking. I don't know. But if you're watching later, congratulations. All right, let's get on with the show. Got some more alpha to get through. We're going to go a little more altcoin focused now. But I also want to talk about what I'm buying, because I did make some pretty aggressive moves yesterday. And I'm continuing to really look at altcoin opportunities. If you guys don't know, I said this on the show yesterday. Like, I was pretty passive in the market for a few months in Q2, Q3, just because things were very shaky. And I just wasn't really like that invested in the market because it was pretty boring. But now I'm really getting more active on the on-chain stuff. So I've been actively buying a lot of stuff. I've been meeting with a bunch of projects, basically just getting my trading mojo back, because I think for me, at least, I feel like we're kind of running out of time. It's very easy at the start of a bear market to say, we've got time, don't worry. We've got time to accumulate. And although that's still the case, we still have time to accumulate. Every day that we say that, like, another day runs out, right? And eventually there's no more time to accumulate. So for me, I think I've just really started to prioritize the onus of time in trying to be active with my research, accumulating projects when I see opportunities, and starting to trade on chain a bit more. Interestingly, a lot of the on-chain opportunities have been pretty disconnected from Bitcoin. Now, I'm not saying any of the altcoins I'm going to mention are like totally protected from the market, because of course, Bitcoin is Bitcoin and it can crash the altcoins. But because a lot of these alts aren't on centralized exchanges and don't have crazy leverage, and just the audience is like more experienced, more degen, cares a little bit less about dumps, is a bit more like stoic during times of market volatility. A lot of these on-chain alts are actually just moving against Bitcoin. And even in the past couple of days, like, some of the best alts have just moved up against Bitcoin. So it's absolutely crazy. So I want to talk about a couple of the on-chain alts, but I just wanted to tell you that I'm back in the market. I'm super active. I haven't felt this in tune with the market in about 6 months, just in terms of sentiment, opportunities, and just general just being in tune with the market. So I'm in a really good position from that perspective. And I recommend if you're just getting back into the swing of things, that you get in tune with the market too, because it's going to help you a lot making these decisions that can position yourself for the next bull run, and really, really, really get a nice portfolio together and learn a lot of important trading skills that you're going to need when things get crazy. One skill that I've started to learn is being able to identify strength. It's probably the most important skill that you need to learn in this market. Knowing when to evaluate the strength of altcoins for future trading opportunities. Now, we got this opportunity yesterday because when Bitcoin dumped, we saw what altcoins held up the best versus Bitcoin. And you can bet your bottom dollar that next time Bitcoin rallies, the strongest altcoins will outperform. So typically what happens is the altcoins that show relative strength during massive dumps also end up showing massive strength during massive pumps. So what I'm keeping my eye on are the altcoins that are responding really well in this environment. Now, they may have dropped a lot when Bitcoin dropped, but which ones rebounded the quickest? And which ones are showing immunity to market conditions? One was actually this altcoin called Prime, which I'm researching now. I'm not bought into, but Hustle mentioned it on his show yesterday. It's a gaming play. It's held up remarkably well. I wanted to take note of that. Injective holding up remarkably well after their latest announcement. WorldCoin holding up well. I probably wouldn't buy it, but it's holding up well. FET and some of the AI coins are actually holding up super strong. So there's some stuff happening there. And Tomo as well. This is an app called Velo. It can show you the top gainers. Similarly, if you're looking for short opportunities, so let's say Bitcoin pushes to the upside now, pushes to 27.5, and then starts to reverse again because we could get a dead cat bounce and price comes back down. If you're a trader, you probably want to observe now which altcoins got smacked the most, because they're going to rebound when Bitcoin rallies. But then if you're looking for another short entry, these are going to get smacked. I think SHIB's one of them because of the whole debacle that happened with their on-chain bridge and the buy the rumor, sell the news nature of the Shibarium event. Compound's one. Some of these DeFi coins are looking quite weak. As you can see here, this is 1 week performance, but you will see this major spike to the downside coincides with the Bitcoin drop. So you want to look at which altcoins performed really badly during this period. YGG performed awfully. Very hard one to trade on leverage though, just because how manipulated it is. Blur, lots of airdrops for Blur, ARPA, Mask, these kind of altcoins perform badly. So these were your strong coins during that period, and these were your weak coins during that period if you're a shorter. Now, talking of strong coins, which altcoins did I buy? I bought some Rollbit. Why? A few reasons. Now, I just want to say this is risky. I don't recommend that you ape into it. Like, do your own research. I'm personally building a position slowly over time into Rollbit. I've now gotten 2 entries on big dips. It's still in an uptrend. The narrative, in my opinion, still has upside. And Rollbit's the leader. And I think a lot of the time people make the mistake of trying to play the rotation plays when the leader often just keeps leading. So for that reason, I ended up buying some Rollbit. What's my thesis currently on Rollbit? I actually did I'm just going to read it out from my phone because I actually went on Telegram and I sent a message to one of my friends with all my catalysts. And instead of trying to recall them off the top of my head, why don't I just read all of the reasons why I like Rollbit? By the way, it just pumped 5%. So there you go. Okay. Perp volume still relatively low. So their gambling aspect actually is outperforming their perp aspect. I'm just reading off my notes that I sent into this Telegram group chat. So I think when volume comes back, it could definitely outperform. And that's not just Rollbit, that's DEXs in general. I think DEXs right now, you're getting good looks at them, like your GMXs, GNSs, etc. Sports season hasn't even started. So we're seeing soccer starting to come back, or football now. NFL, NBA are going to be starting up soon. Casino-based rev has been outperforming on most days. An exchange listing may be on the horizon. I just read out all my bullish points, and then I'll get into the bearish points. At a 500 mil market cap, I still think it's reasonable given their revenue. I did my DCF, so cash flow model, and I evaluated that if they can 3x their overall revenue across all of those three sectors, then you're looking at roughly a valuation of 4.5 bill on their fully diluted, which would see it roughly 4x. Taking into account the burn and the active revenue they're making, maybe the tokenomics, due to the fact that supply is coming off the market, could result in something like a 5x in that scenario. So I do think there's upside. There's probably like 4 to 5x upside just based on the maths. There are a few negative aspects though. The regulatory risks, of course, mean that like we just don't know what's going to happen. Are there going to be like flat out, IP bans on Rollbit? Are there going to be strict KYC requirements? Is their founder going to go to jail? Like that's always a risk. The other major risk with Rollbit is the lack of transparency from the team, given the fact that they're not doxed. I made the point that potentially, this is a very interesting discussion, right? I think that the team could, now this is kind of controversial, but I think there's a possibility that the team is using the Rollbit token as an exit opportunity. Now, this may sound really weird, but my theory here is that, okay, so you got to ask yourself the question, if they're running a really profitable casino, why did they decide to put on the token burn? Because if they're making $1 million a day through Rev, why would they give Rev back to stakers of the token when they could just take the money for themselves, right? They're making so much money. It's just printing. Couple of reasons. One, pumping the Rollbit price gives marketing for the product, and marketing the product gets more users, which means more revenue. So the first thing is it could be a publicity stunt. But the more controversial angle is maybe they know regulatory headwinds are coming. Maybe they know that in a year's time they're going to face some real trouble. So they're trying to shore up some sort of exit strategy in the short term. And if you're a project that can probably never sell to a buyer like Rollbit, the easiest way to get your exit opportunity is through pumping the token. So I've got this theory that the team is trying to pump the token and will eventually dump the token. So be fucking careful because it's a game of hot potato. But pump the token in the meantime to get an exit opportunity. Now, this is just a theory I have. I don't necessarily say it's 100% true. And remember earlier in the video, I said, you always got to think probabilistically. So I said, there's like a 5% chance that BlackRock's manipulating the Bitcoin price right now. This Rollbit thing, might be closer to a 30 or 40% chance. That doesn't mean it's guaranteed. It's just a theory I have. But if that theory is true, it would mean the Rollbit token, they're incentivized to pump it at least in the short term. So it's kind of a weird one. I want to hear your comments on Rollbit below. But I did choose to DCA some more in. I'm building a position because of some of the catalysts I just mentioned, keeping in mind that it's risky. So I'm not going to let this go over like 5% of my portfolio. But this is a bit of a shorter term play. This isn't necessarily a play for like the peak of next bull run. This may just be a 6 month to a 1 year play. But this is one thing I looked at. And it also had relative strength. The other thing I looked at was Unibot, because Unibot came a lot of its highs. It came down from 220 to 240 back down to 155. And I really do believe in the Telegram bot narrative as a front end. I think we're only really scratching the surface of what can be done on front ends. If you don't know what Unibot is, basically on a Telegram chat, you can essentially place orders on Uniswap with greater efficiency, roughly a 6x efficiency increase, 4 to 6x, through a Telegram chat. So you don't need to bother trading on your MetaMask on your laptop anymore. You can do it on your phone, wherever you are, on a Telegram chat. It's pretty cool. Now, it is a bit janky and there's things that can improve, but they just released Unibot X. We saw a dump. So we saw a buy the rumor, sell the news event in line with the Bitcoin dump. So of course it has run up a lot, but I started to notice that I was getting an opportunity to buy the retracement. So I added a bit of Unibot. And when I look at the chart, I'm seeing a deviation below what's a pretty major support. There's kind of two scenarios here. One scenario is that it reclaims. And this would be very bullish, by the way. If you see it reclaim and retest 160, that would be very, very, very bullish. that I can start to make a move up towards its high. The less bullish scenario is become down and test 140. This might be a place I add a little bit more. And then I'll look to see how we react around this zone. If we push up here, that would be my first TP zone. And then I would look for continuation on the spot long-term portion of my bag to hold up to all-time highs. For me, I'm not really trying to time this too much. I do have my DCA zones, as I just mentioned, but the goal for me is to get the lowest cost basis possible because I believe in the product and I want to hold it medium to long-term. So that's something that I'm looking at. MT says he's been using MaestroBot. Yeah, Maestro is another nice bot. Going to look through some of the other comments now to see what you guys are saying, and then I'll continue with some of the stuff that I prepared. OG Banter says they won one of the iPhones. Congrats, that's crazy. I still don't know if the winner of the Ethereum is here, though. I'll look at that later. So yeah, that's basically my plan with Unibot. Another thing that I've been doing, by the way, post all your questions in the comments below if you have a question, because after I get through this, I'm going to answer all the questions and we're just going to chat shit for the last 20 minutes. Another thing that I've been doing is using KyberSwap's AI tool. So I talked about monitoring relative strength based on pure price action on something like Velo or Banter Bubbles is really good at that, or CoinGecko, just any kind of price tracking device. Something else I'm doing is I'm incorporating AI into my trading. So wherever we can use machine learning, I think to level up investing, it's only a net positive. And what I've been doing is I've been using KyberSwap's AI tool to evaluate on-chain data. So how would I do this? Well, essentially I would go through every single day, and this is something I do, go through the bullish section and look at what altcoins are bullish. What it's going to show you is on a 4-hour rolling basis, based on the amount of trades that are happening on chain, it aggregates them, uses a machine learning algorithm to work out momentum and give a token a bullish score. So the bullish scores give you an idea of which tokens have flicked into bullish territory over the last 4-hour blocks, but over the last day, as you can see in front of you. What I do is I only look for tokens with a lot of volume. So something like XTN with 32K, I ignore, right? Because there's a lot of crap tokens here. I like looking at the ones that are really bullish in terms of their Kyber score, have ticked bullish, but also have a nice amount of volume. So if we scroll down the list, I want to find one in the millions of dollars. ANT is one of them. Acro is another one. GULD is another one. Strong's another one. And you can start to get trading opportunities off the back of these. So the best scenario is when you know something fundamental is happening and you can combine it with on-chain. For example, FRAX. If we look at FRAX today, it's up 7%. By the way, this is one that you guys know I'm DCAing into. Then FRAXLend is going live. FRAX V3 is coming. They've got their own L2. Lots of stuff happening. But if I want an entry onto FRAX, because trading and buying is a different ballgame altogether because you have to get good entries, then what I would do is I would come on to KyberAI. I would click on FRAX. I would click on Ethereum because that's the network with the most volume. And then I would start to evaluate how bullish it's looking from an on-chain perspective. And you can do this through monitoring on-chain analysis. So are buyers positioning themselves in the token? We can see August 1st, buys outweighed the sell significantly. We can also see in the last couple of days, you have more buyers than sellers, and sellers are starting to dry up, as you can see here. And you can also see that it did tick into bullish territory on its Kyber score, which is your AI dashboard. So that's something that I've been doing. And there's also a lot of other metrics, not just number of trades, but also the volume. So is there a spike in volume that's indicating like big players are starting to position themselves? On FRAX, the answer has been yes. So this has been like one of my favorite tools for researching and finding crypto pumps. And the really cool part about it is basically what they do is they send you a watch list to your email every day. So I don't even need to go on the website. All I need to do is go into my email and click on their top tokens, and I can see the top tokens. I can see the worst tokens if I want to short. I can see the tokens with the best centralized exchange inflow, the worst centralized exchange inflow, basically aka are funds actually leaving exchanges, trending tokens, and more in a daily package each day. So it's very, very cool. Now, I know a lot of you are probably out wondering, like, can I use the product? The answer is not everyone can, but you can sign up for their beta using the link in the description and apply for early access. I think it takes a little bit of time to get approved, but once you get approved, then you can use the application. So it's not open to the public, but you can try out the beta access using the link in the description. And yeah, I recommend using this. And I think throughout the rest of the show, we will refer back to this during certain periods if you have any tokens you want me to evaluate. But put your comments now. Put your questions in the comments and I'll answer some comments. The waitlist is so long. It is long, but I think you can get expedited. I'm going to have a talk to the team as well and see if we can speed up the waitlist process. Kenneth says, great content. I appreciate it. I've been uploading every day, but not actually doing live streams. It's great to be back interacting with the community again. Let's have a look at some. Yeah, put all your questions in the comments below. Just reading through some comments there. Blah, blah, shilling trust. What's the next leverage shill? I mean, I'm not really shilling anything because, I mean, if you're referring to KyberSwap, that's a product that I actually use. Yes, they're partnered with the show, but I actually use the product. So it's a tool that can help you out. It's funny. You want the next shill. All right, let's get on with it. I got some important news that I want to go through. So I'm just going to go through some random bits of news. Before the show, I put together like 6 or 7 links I thought were relevant based on some updates over the last few hours. And if you want to ask any questions, I'll get to them. 2024 will be the first halving where the supply of Bitcoin available for trade decreased since the previous halvings. This is interesting. First halving that we're getting. See, these are previous halvings with the dotted lines. That Bitcoin supply is actually decreased. So what this tells me is that we're going to an environment where the new issuance of Bitcoin is going to decrease in tandem with the availability of Bitcoin in the open market decreasing. That could lead to some sort of supply squeeze. I mean, it eventually will one day, by the way. I don't know if it's this halving or next halving, but if supply keeps decreasing for Bitcoin, if this is a trend and we see supply going down and down and down, and then you keep cutting the issuance, well, eventually it's going to have to reprice higher alongside demand. So that's something interesting to keep your eye on. This is a very bullish sign, by the way, from an on-chain perspective. Unfortunately, it doesn't mean anything in terms of short-term trading. Bitcoin price could do what it wants, but it just does mean when we do get that upside move, it could be more explosive next halving. 𝗕𝗬𝗕𝗬𝗕𝗓 posted a graphic that I really liked. He said, if Bitcoin's adoption curve continues to grow alongside the slope of a traditional power curve, it could take more than a year to revert to the old highs. This is no shock to me because the Bitcoin halving is in April. And typically Bitcoin peaks 1 year after the halving. And if it does take a year, according to this curve, to reach a new all-time high, then that will coincide with roughly 200 to 350 days post-halving. And basically every single peak has happened 200 to 300 days post-halving. Last cycle was 240. Last cycle was 220. Cycle before that was 240. So this lines up perfectly. So this adoption curve actually is exactly in line with when post-halving peaks tend to happen. Pretty interesting. And you'll also note on the run-up to halvings, we get these major flush-outs. Look what happened in 2020. Look what happened in 2019. Look what happened in 2016. You get these flushing events. So we are on the right track. We're just experiencing another flush out. So I'm not really too worried. Actually, I'm pretty excited by the fact we're getting lower prices because we're getting opportunities to accumulate in what is an environment where, without trying to induce FOMO, time's running out. Now, it could be another year, but still, time is objectively running out. We no longer have, at least I hope, like 3 years of bear market ahead of us. So the window closes and closes and closes. So the opportunities we can get now, I think, are more valuable from a time perspective. If you can get opportunities to accumulate Bitcoin at low prices, then alts as well. Another bit of news I saw was Base starting to win the race in terms of the L2 transaction count. And an interesting observation alongside that is DEX volume flew to new local highs during the Bitcoin collapse when volatility was reintroduced. But a lot of these DEXs are still pretty much dead price-wise. Like a lot of these big DEXs. I mean, Joe, let's have a look at Trader Joe because their new AMM model that they launched is really good, but it had a lot of hype and then I think it dropped a lot. So let's have a look at this one. Yeah, it got absolutely smacked. So this is probably one that I'm going to have a look at. A lot of DEXs are in the same boat. Like if you look at the perp DEXs, GMX, starting to get to levels. It did rebound today. I actually talked about this yesterday at $36. But yeah, this is starting to approach levels not seen since 2022. Barring one dip, GNS, they do sponsor the show, so not financial advice, but in terms of the token, which is a token that I hold for full transparency, you're getting this resetting at levels not seen in a while either. So yeah, we're getting a lot of good looks at perp DEXs, and we've already seen what can happen with volume increases during periods of market activity. So that's super interesting to watch. Opinion on XCAD watch to earn. Super interesting. Super interesting. I don't have an opinion on the token, but I think they're a great team. And I actually had a chat to them and I was very impressed with them. So that's a good thing. Canadian dollar straight to the toilet. Well, the Australian dollar is straight in the toilet as well. So yeah, luckily I trade in US dollars. So all my profits are in US dollars and not in Australian dollars. But yeah, a lot of currencies are bleeding pretty heavily versus USD. So wherever you can earn the stronger currency, try and do that. Although it's not so easy for everyone to say. And yeah, obviously the wildfires there, which are terrible, by the way. So, you know, I offer my support to anyone that's struggling with that. It's pretty horrible. We had the same thing in Australia 2 years ago with the wildfires. But obviously that has had an impact on the currency as well. Greetings from Paris. I actually went to Paris, Kenneth. I think a month ago I went to Monaco and Paris. It was amazing. Very quiet though because of the riots. So I felt like I had the whole city to myself. But it was very beautiful. I'd like to go back when it's a bit busier. Buy alt spot now, or are we going lower? Well, isn't this the $1 million question? I have an answer to this because I think about this constantly. Okay, there are a lot of altcoins that you probably don't want to go too heavy into right now, because there are a lot of altcoins which structurally just don't look good and will likely continue to bleed if Bitcoin drops. A lot of the major alts are in this category. However, there are some altcoins which have their own narratives, which I'm starting to position myself in. I mentioned a couple already today, but I think broader narratives like L2s, Optimism, Arbitrum, these are things that I'm starting to accumulate. Now, I'm not going too crazy yet, because if we do get a bit of a September, October pullback, which we could in altcoins, because that's what historically has happened in the market, I want to be prepped to be able to have leverage the DCA in. But I do think that if you spot a solid fundamental coin, there's no problem with starting to DCA now, because you're in a general accumulation phase for a lot of altcoins. Does that mean they can't draw down another 50%? No, they can. Especially things, you know, these big majors like Solana and AVAX and these kind of things, they can draw down a lot. But we are hitting the accumulation zone for a lot of alts. What I would do, though, is I would make sure it has a strong narrative behind it. And I would also make sure you're buying into an altcoin that's in an accumulation phase, because some alts are just like bleeding and just like, okay, I'll give you a few examples. I'll give you an example on the screen. I'll show you some altcoins that you don't want to buy into. And then I'll show you some charts that you do want to buy into. Now, this can be applied to any chart, by the way. I'm just using this to kind of visualize what I'm talking about. Sandbox, still below its 200 MA on the daily. It pumps, it's rejected, pumps, rejected. Lower highs, lower highs. This is not a chart that you want to buy into because you're just catching a falling knife. Bitcoin, although some of my analysts kind of like it, and I know Andrew Kang likes it, for the sake of this video, this is the kind of chart I'm trying to avoid. You know, these charts where, you know, you're not on support, you're just dropping, you're making new lows, you haven't even broken any momentum indicators. Difficult for me to justify buying into these, right? Very, very, very difficult. Other charts, however, starting to look like they're entering the accumulation range. Solana's one of them. Now, unfortunately, Solana's range actually goes all the way down to $14. So if I go into the weekly chart, right, I'll tell you the range for Solana. It's this. This is your accumulation box for Solana. Where's my freaking tool? Here we go. This box. It goes down to this wick at 14, and it goes, you can kind of say it goes up to that wick, but I'll tighten the box a little bit just for the purpose of this example. This is like your accumulation phase for Sol. So if Sol continues to range and does something like this, chops up, we see deviations below, above, and then like sets up for a bull run, whatever. Let's say it does something like this. Yes, it's going to drop lower. So if it goes down to the bottom of this range, that's another 40%. So if you start buying now, you have to be willing to keep buying down another 40%. But if you don't want to time the market and you're happy to spot buying, then this is a general accumulation range. Keeping in mind that you probably do get a chance to buy 14 to 20, because the lower half of this range we just tagged is also an area that we can come back down into. So I'm looking for alts like this. Why? Because they've swung off their lows. See this low? This is the low for Solana at $8. It's come back up into an accumulation phase, and now it's ranging. It's much easier to DCA in a range than DCA into something like Sandbox, which is just going down and down and down. And I would say Phantom's the same. Phantom's a coin that I may look to accumulate again, but it's just not showing enough strength due to the multi-chain exploit that I just want to see how it reacts. If it starts ranging and starts to build up off its base, then this could be a good look as well. but I'm just giving you TA examples, right? MATIC, let's have a look at MATIC. So MATIC has been kind of in an sloping downtrend. I still think it comes back down to 30 to 40 cents. This zone here, it hasn't tagged it again. Sol is a little bit different. So yeah, you can look at pure TA here to kind of work out which alts are better accumulations than others. So my TLDR is I'm looking to accumulate alts which are in accumulation phases. I think Arbitrum, by the way, is in that phase. Look, it doesn't have a lot of historical data, but Arbitrum under $1 I like in this zone. And yeah, I'm just stacking the really strong alts with strong narratives. So L2s have a strong catalyst ahead of EIP 4844 at the end of the year. Telegram bots have good narratives. That's why I bought some Unibot. 𝗕𝗬𝗕𝗬𝗕𝗬𝗕 has a strong narrative. That's why I bought some Rollbit. Solana, I like it because it's a bit of diversification away from my typical L1 portfolio. And it's kind of like a hedge against EVM. And I think a lot of developers would flock there if some sort of EVM FUD happens or some sort of ETH FUD happens. So it's kind of a good hedge in my opinion. So I like Sol, but there are a lot of other DeFi plays. FRAX that I like, THORChain that I like. And a lot of these are in DCA ranges, but a lot of them have very big ranges like Solana. So, you know, they're 40, 50% ranges where you can still get wrecked 40, 50%. So just come up with a plan now where you're accumulating fundamental alts for next cycle, but you're doing so in a way that you have dry powder to take advantage of downside. Because we don't know when the bottom is going to be. I think a lot of investors make this mistake. They try and invest on the premise that they're catching a bottom, but it's hard. Someone said Arbitrum's unlock in March seems significant. Will almost double the amount of tokens in the market. What are your thoughts? It is significant. However, a lot of the time unlocks in this market end up having the reverse effect. So I do expect some sort of sell-off and maybe it puts some pressure on the token. But Arbitrum is pretty well, since it's such a major large cap in the market, it's pretty well evaluated on an FDV basis. Like I'll show you. If we go into CoinGecko at the moment and look at Arbitrum. I'm searching on my other monitor, Arbitrum. We can see it's valued at 1.2. It's ranked 39, but it's not actually that low because the FDV is, 10.2 bill. So 10.2 bill for ARB is pretty fair because if you look at some of its competitors, you've got Optimism at 6.4. You've got MATIC, I think, a little bit lower than Arbitrum. Maybe it's similar. 5.8. So yeah, maybe Arbitrum's a little bit high. Maybe you're right. Maybe it's a little bit higher. Maybe it could come down a bit into the 6-7 FDV range if the market scales accordingly. So AKA if the market if Arbitrum had its unlock today and Polygon and Optimism stayed the same, then yeah, maybe Arbitrum could drop 10 to 20% because unlocks will no doubt affect it negatively, but I wouldn't worry too much about unlocks. That's my point here because oftentimes it is priced in. But yeah, it's a worry, but it's not going to stop me from DCAing in. Why? Well, the EIP narrative is in December. So we could see a run-up in L2s pre-December. That's when gas fees are going to significantly reduce with the new ETH upgrade. So I don't want to be hanging out too long for March, April, and not having any exposure and risking that. Because that sometimes is even riskier, not having any exposure. The dry powder, man, without it, we're doomed. It's so important. I know it's boring. People don't want to hear it. Hold stable coins, but it's so important. I was able to really go aggressive this week and take some opportunities on those dips with some bids when Bitcoin was wicking down because, I had dry powder. And if you don't have dry powder, you can't put in stink bids on exchanges. You can't take advantage of downside. But it's the only way to get your DCA price down. Otherwise, you're going to end up with super high average buys in the next bull run. So that's not saying you should FOMO in now. It's just saying, look, you have dry powder, so you can continue to lower your cost basis on the coins you believe in. It's quite a simple premise. And if that means you have to substitute dry powder with income, it means you substitute dry powder with income. That's something I do. As long as you're creating a way for you to have leverage to buy in. Polygon less market cap than ARB? Wow. Yeah, but even the metrics on Polygon have taken a bit of a dive. I'll show you this. Polygon, I don't think people reacted too well to the Polygon runway news that they spent so much on BizDev. I think a lot of people got worried. The L2 space is just so competitive, guys. I mean, we've got ZK Sync, Starknet, Scroll, Mantle, Linear. I'm not a huge fan of just DCAing into L2s and holding forever. for the reason that I don't know what the winner's going to be. Is it Base? Is it MATIC? Is it ZK Sync? Is it Starknet? I don't think we need this many L2s. And I don't know what the winner's going to be. I just don't. I know Ethereum's going to benefit from all this. So Ethereum's like my guaranteed DCA amongst all this. So all other L2 plays simply become narrative trades ahead of EIP. They don't really become long-term holds. Unless the ecosystem shows staying power, time will tell. Arbitrum, I think, has a good chance of doing that. But, you know, Optimism, I think, has a good chance of doing that. But they have a lot of unlocks. So it's just not a narrative I'm keen to, like, DCA a shit ton of money into, to be honest, L2s. Ethereum's probably the better player. Someone said opinion on Near protocol. Mo, I think Near's really struggling. I'm not like involved with the devs, so I haven't had, you know, many recent updates, but no one has money on chain. So on-chain liquidity's nosedive, as you can see. I'm not seeing much innovation. I'm seeing no innovation, basically. Like, what are these projects? Like, to be honest, only 1, 2, 3, 4, 5, 6, 7 projects have over $1 million in liquidity. Sharding's cool. So I know they're building towards something. And look, they're a non-EVM L1. That's a hard thing to do in a very ETH L2 dominant market. But what is their differentiator? Like, for me, I need L2s to have L1s and L2s to have like a real differentiator. So what is its use case that's specialized? It's kind of why I like Say, because it's like the trading blockchain. I think that's a really powerful narrative. I like Solana because it's like the high throughput blockchain. I like blockchains that have their own narrative and niche. I feel like Near's a bit lost. Don't you guys feel that as well? It's like a bit lost. It doesn't really have anything on chain. I'm not really seeing many dApps. It's like the sharding chain. But I don't know. Are people crying out for sharding? I'm not so sure. Unless it can show like results that are just so much better than all its competition, better than Aptos, better than Sui, better than Solana. It's just facing a lot of competition and doesn't have much of a differentiator. So I don't hold Near. But yeah, but if you like it, look, you can look into it, but I'm just not that bullish on it. Very curious what your thoughts are on Joe. I quite like it. I would love to get the DEX stats. I'm going to attempt to get them right now. Let me try and get the stats right now for you so I can take a bit more of a statistical approach, but I like it. And it's one I do want to accumulate. I might start looking at adding some spots soon. I think it can bleed a lot more though. But, you know, as I said, I'm not going to try and time it. I do like it. I'm just trying to be selective with what I hold. I can't get the stats, sorry. But I do have the stats on perp dexes. This is also interesting, as you can see in front of you. While I'm reading my injective comment, what about injective, Miles? Injective's brilliant. It's so good. The problem is the lack of pullbacks. People know it's good. That's the problem. Injective and Say, I think they're great plays on Cosmos. I'm a big Cosmos ecosystem bull. I think it's a fantastic ecosystem. I would love a little bit lower, maybe in the $5 region, but it isn't an uptrend. So when a coin's in an uptrend like this, like any major pullback, I think you can take advantage of. 7 would have been great. I'll probably wait a little bit. I'm not in a rush, but this is one that I'll go into the next cycle holding for sure. It's more about when I start to accumulate. I've got other priorities right now, which I think can outperform in the short term. But one thing's clear, the relative strength. Like if we go into Velo, look at the top gainers over the week. Injective here, pumped during the Bitcoin collapse. I mean, you can't even like make this shit up. Like, okay, it did technically dump when Bitcoin dumped, but it rallied. It like sprung straight off the lows quicker than any other alt. Because, I mean, it has a strong narrative behind it, and it has a good product. So I like it. Someone wants me to chart Link. Link is an annoying project. Why is it annoying? Because it's so important, but the token itself just does such a bad job of accruing value. So for me, holding Link's a bit tricky, because if you're holding Link, yes, you know you're holding something that's going to be around next cycle, but you're also holding a stable coin that could very well just range well into 2024. And I guess the problem with Link ranging into 2024 is like it's opportunity cost, right? So if you've got so much money that you don't mind locking liquidity up in Link and then just holding, then I think that's fine because you've got a lot of money. But if you're trying to be a little bit selective about what you hold and wait based on opportunity cost, then there's a huge cost buying into Link because it's going to just kind of go sideways while other alts are pumping. Now, what's the caveat here? Caveat is we get a catalyst, we spike, and I'm sure at some point we test this range again. Then I'll start to look at buying. but I want to see something to change. I want to see something change before I accumulate. This is the funniest chart in crypto. It is a freaking stablecoin. It is a freaking stablecoin. Crazy. Another one that I'm looking at that doesn't have a token yet is Tomi. Now, Tomi is an official partner of the show. We partner with them because I think some of the dApps that they are creating are fantastic. So they're in the privacy/ownership niche, which I think is going to be a big niche next cycle. There's one product that I'm particularly interested in. Now, no, it doesn't have a token. They do have a token sale upcoming though, but doesn't have a token right now, and it's called DOP. Now, what DOP allows you to do is, I'll give you an example. Let's say you have an NFT, right? You have an NFT in your wallet. You own a Bored Ape. You want to show someone that you own a Bored Ape, but you don't want to show them that you hold 1,000 Ethereum in that wallet. And you don't want to show them that you just swapped that 1,000 Ethereum into 𝗕𝗚 because you don't want them to make fun of you. What you can do on DOP is choose which assets within that wallet you want to publicize. So you want to publicize your Bored Ape, but you can hide your Ethereum and your 𝗕𝗚, and you can hide all those trades. So it gives you ultimate ownership over your own data because you can obscure information from the public. Now, this has many benefits. I'm sure you can think of them. There's a list of benefits, but when you go into a supermarket, do you want the cashier to necessarily know how much money you have in your bank account? No. I think it's the same thing in crypto. I think next cycle, there's going to be huge demand for crypto ownership. And this is one that I've got my eye on. As I said, I'm doing a lot of research into like fundamental projects in interesting niches, and privacy is one vertical. So that's what I look at. Let's go into 𝗪𝗡𝗡. Let's look into 𝗪𝗡𝗡. So 𝗪𝗡𝗡 is a good long-term play, but it's kind of also in this link category of like altcoins an altcoin that's just super weak and just hasn't shown any strength. Yeah, I'm not DCAing into this right now. I do hold a little bit, but I'm not DCAing heavy amounts until we see some sort of formation. So I would look for this area to be reclaimed. But yeah, this is just starting breaking below. It looks ugly. It's just not, as I said, I'm selective with what I buy now. I'm trying not to buy weak coins. This is a weak coin. I'm trying to be in strength. That's why I'm buying more coins during accumulation phases or uptrends. Soloway said he wouldn't be surprised if China pumps money into Evergrande on Monday. 100%. I think that's a possibility. Let me just see if there's an update there. I'm going to Google China stimulus Monday. Let me just see if there's an update. I don't know. China stimulus. No update yet. I think it's a possibility. I also don't think it will inherently pump markets. Maybe a little bit, but I wouldn't be trading off the back of this. I'm not seeing anything about, I mean, obviously they're going to inject stimulus, right? But I'm not seeing any updates about it. So, but yeah, maybe on Monday, maybe, but I wouldn't trade off it. I do think on Monday we can, once the market opens, because the NASDQ pulled back so heavily, I do think we can see a bounce. I'm cautiously optimistic that we do see a bounce. I'm cautiously optimistic because look at the NASDQ here. I'll get it on the daily chart. Yeah, you can see here just starting to, I don't know. I just think we could see a bounce back up into this range. So just keep your eye on that on Monday. NEAR also got hit by SEC. Yeah, SEC compliant coins are a lot stronger. One more question before I go to head off. What are your thoughts on the RUNE chart at the moment? I'm not buying into RUNE, but I am very interested on pullbacks because I think their lending protocol is going to be quite good. And I also think perps coming to the platform will be an amazing catalyst for revenue gen. But RUNE is a token that performs better in a bull run. And for that reason, I want to hold it closer to the bull run. I'm not too fussed right now. But I'm going to head off because I've been here for an hour. But I really enjoyed doing this. Thanks to everyone that joined along. It's been my first live stream in almost 2 months. Can you believe it? So I've been going live, but I've been recording 2 hours before and scheduling. I'm going to try and do more actual lives now, though, especially on the weekends. So thank you guys for joining. I appreciate all the support so much. It was great to hang out with you again. And I'm going to see you tomorrow for an AI video. If you have any more questions, drop them in the comments after the show, and I'll do my best to get to you. Peace out.